Good weekend, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Friday, and this is the 11th of August, 2023. You know, there's something obvious going on, and nobody's picking up on it. Every day we see the analyst, is the Fed going to raise rates again come the September meeting? Aren't they? Blah, blah. Is it about the Fed making that move, or is it about what interest rates are going to do leading up to that move? Chew on what I just said. Because each day we're adding yield upon yield upon yield. And nobody's making mention of that. And as this yield keeps climbing, we're doing the Fed's job for it, because each time it's taxing us. We're losing money and the economy's headed down. So over the next 5 weeks, 5 weeks, today's August 11th, the Fed meeting's September 20th? So over the next 5 weeks plus, as we keep adding yield, you got to ask yourself, what do you do? I heard an interesting interview today where someone was talking about on CNBC, I believe it was, and they were saying, you know, you typically don't see the Fed pause until the 10-year and whatever the true Fed fund rate at that moment is are very close to each other. You're a full point away. Does that mean we got a ways to go? Probably. So just want to point that out. What does that weigh on? That is certainly not bullish in the metal markets. It is bullish the dollar. It's bearish a host of currencies at this point. The slowdown in China and their whole economy is just a mess. That's going to weigh on Australia with all their exports. When you look at the energy markets, all you got to do is read the IEA reports and everything else that you're reading, and you see the tightening that is going on, smaller production. Now there's a new issue about Canada bringing on this new pipeline that's ready to go. Will we get more oil or less oil into our ports in America, or is it going to make it to their ports? What is the impact of that? The problem is, when you have governments, this was, I think, the Kinder Morgan pipeline. When you have government step in and take things over and finish them, and you think the government can run a business, boy, are you wrong. They can run a business into the ground. They don't know what they're doing. I have yet to meet a politician as a group when they come on and tell you how to run a business. That's not to say some individually weren't very bright businessmen, made so much money they wanted to go into politics. We see that all the time. But on the whole, the professional politicians, they couldn't do a barista job. I really believe what I'm saying. And now they're going to run a pipeline. So their first thing is they look at their competitor's pipeline, I think it's Ember, and they go, okay, we'll double the price of that because we got to make money back on what we just did. Who's going to use their pipeline? You got to laugh at this. You could write book upon book upon book if people would read of the stupidity of some of this. I don't care if you got to break even. Instead of breaking even in X years, you might have to do it over a much longer period of time. You decided to take it on. There's a reason the private enterprise didn't. What's wrong with you people? All right. And Canadians, Americans, it all works the same in government. Whoa. So as I take a look at what's going on in the chart here, you can see how the market came up and slipping back for the very first time. And what does that mean? Well, it's good. It's interesting on a monthly basis. You're down 2.9%. What were you last week? Maybe we should take a look at that. So the week before, right here, you were up. But that was your peak up, and now you're just begun. This is a monthly chart. We're not through with the month. But for the beginning, the first not even half, we're down 2.9%. Weekly charts have been backing off, and you can still fall all the way back here to the 43, 47 level to find support. Wouldn't surprise me at all. When you take a look at the chart on a weekly basis, a bar chart, the pattern is still one of higher lows and higher highs. That's still bullish anyway I cut it. You're still well over the 18-week average. The support you can see right through there. And by the way, this 43, 47 is going to jump right away. How do I know that? Well, the week before, if we take a look at the averages, they were at 43.28 the week before, 43.08. They're averaging about an 18, 20-point gain. I'll bet you when you reopen come Sunday night that you're probably up initially in the 43.55 to 70 level, something in there. Just because of the slope, you're going to lose the days back here. This is an 18-week moving average. You're going to lose one of these low weeks and add a higher week to it. That's how moving averages work. So it'll be a bit higher on that. What about momentum? You got a 77 reading. So unless something magical happens this week, and unless you get that reading back into the 80 level, which can happen, I agree, but if it doesn't, before you make this high, wherever that 18-week average comes in, I look for price and the 18-week average to meet each other, and I'd be giving you the rib shot saying you don't want to be long this market right now. Today was the day on a Friday to come out and go to the sideline. Not the case in the Dow. It's still fully embedded. It is the strength of the market. It's not got a pattern where you got higher lows, higher highs. You actually have lower low, higher high, and it's fighting at the upper Bollinger Band. What are the odds of staying over that band? Only 5% of the time do you stay out of the bands. It's pretty hard for me to tell a client to buy there because it's going to get out of the band and keep going higher. Not in love with that. What happened in the NASDAQ? You lost the embedded reading. So before you come up through that high, the odds favor, it doesn't mean it has to happen, but the odds strongly favor that price and the 18-week average are going to come together. It's a spot for me to give you the elbow and say, out you go. And lo and behold, I got a sweep. I don't have 4 aces. I got 3 of them. And they're all saying, come out. Now, here you're already on the 100-week. If you drop from here, the next support's the combination of the 2 and the 18-week average of closes. So my work is saying, Ira, good time. It's August 11th. Step back from trading on the bull side, these stock indices at this point in time this week. Re-embed, I get bullish again. Don't, I'm looking for more down. Remember what I keep telling you. You tell me. Remember, futures markets in treasuries and bonds are inversions. The lower they go, the higher the yield. I wish they would have built them another way because you'd understand it better. But as this goes down, the yield is going up. Does this look to you bullish in any manner? Now, admittedly, you're oversold. I would not tell you to deploy new money on the short side. But there's nothing bullish on that, which is a problem. Same thing going here in the 10-year. If I did the 5, you'd have the same. The dollar index, until this week's low is now taken off, the odds favor, because you have an outside week up, that if you don't take out that low, and that's right against the 100 and the 18-week average of closes, you're opening the door for the potential of getting up to the 104 area, which is the upper Bollinger Band. Now, we have what's called price counts, and it's one of the free offers that we have in our company. And when you go to our free offers on iraepstein.com, you get a whole array of things you can choose. There's many more down here. Choose that one. We did the dollar today showing the objective, and lo and behold, it's in the 104 zone if the market's going to continue this rally. So very interesting work. I love price counts. They give you an idea where markets might be headed. Now in the euro, take out this 109.35 and suddenly you have lower highs, lower lows, and you're opening the door for a challenge of wherever the 100-day average is, its closest key average, as your first target on the downside before you get back over this week's high, if you take out that low. In the Canadian dollar, I don't see a trend. I see a market that went up, tried to fight the battle that I thought it would lose at the 200-week, the 100-week, and the upper Bollinger Band, and it's just slipping right back. In the end, you're cutting through old numbers. Now, you're not down here, so don't get me wrong, and I don't know that you're going there. You're very oversold. I'm going to look for support against the lower band, but that's not bullish. That's just areas to cover shorts. In Bitcoin, you have no action. It has fallen asleep. The volumes, nobody's trading it. Sideways action. Don't see anything to do there. The differential between Brent and WTI keeps getting narrower and narrower, but you're up at key resistance points here in Brent between here and the 100 week average, a lot of resistance. Same in WTI. I could not tell a client to put on new longs against those type of areas. Same in gasoline. Am I bullish? Yes. Have I been bullish? Yes. I've been talking about it, but nah, I think it's too hard to deploy. So again, take advantage. We have so many free offerings to you. All you need to do is go to iraepstein.com for free offers, or make it easy. If you're on your PC, just move up here. You will see a cursor. Click it. It'll take you right to this area. I'm Ira Epstein. Have a great weekend. I'll see you all Monday.